Did you guys notice the move down SoFi took here in after hours? Yeah, not so pretty. There is some bad news to go over, and we're going to get straight into it. We're going to skip the intro and get straight to the info. But before we get into the bad news, I want you guys to know that in my view, this is actually bullish for the long term. And I think that's why SoFi stock has recovered a little bit. So it says, SoFi today announced updated guidance for its anticipated full year 2022 financial results following President Biden's directive to extend the federal student loan payment moratorium from May 1st, 2022 until August 31st, 2022. Management now expects that a number of factors, including the impending fall midterm elections, will precipitate a likely seventh extension beyond August 2022 by the administration. Accordingly, management's updated 2022 guidance assumes that the student loan moratorium will not in fact end during the course of 2022. SoFi's updated adjusted net revenue and adjusted EBITDA guidance for full year 2022 is 1.47 billion and 100 million respectively, a reduction from previous guidance of 1.57 billion and 180 million respectively. SoFi maintains its original guidance of 280 to 285 million adjusted net revenue and 0 to 5 million adjusted EBITDA for the first quarter of 2022. Quote, SoFi remains incredibly well positioned to drive continued strong growth in revenue, members, and products, along with continued and improving profitability, despite the fact that our student loan refinancing business has operated at less than 50% of pre-COVID levels for the past 2 years, said Anthony Noto, CEO of SoFi. Even with the assumption of no end to the moratorium in 2022, our new full year 2022 financial guidance represents approximately 45% year-over-year adjusted net revenue growth to 1.47 billion, a tripling of adjusted EBITDA to 100 million, and a doubling of margins. SoFi has done an outstanding job achieving record financial results, member and product growth, and consistent profitability. Despite the negative impact of the extended student loan payment moratorium, we will work diligently to continue that trend in 2022. So yes, they did revise their guidance down just a little bit, but why is this actually long-term bullish for SoFi? Well, it comes down to eventually student loans will need to be repaid. Once that happens, people will rush to refinance these student loans. SoFi will do very well when that does happen, but ultimately the fact that SoFi stock is going down, it makes it less risky to invest in for the long term. You're getting a discount. So imagine it like this: if SoFi stock was trading at $20 right now, it would be a lot more risky even on an uptrend, right? Obviously, buy low, sell high. It'd be a lot riskier to buy that stock or buy SoFi at $20 per share relative to $8 per share. If you believe in the business, it'll be just fine. It'll be peaches and roses in the next 3 to 5 years. It'll be all fine. So you're actually de-risking yourself by averaging down at these prices. Not financial advice, not a recommendation. Do what you guys want to do, but that's personally what I am going to be doing. And I know some people have wondered, I guess, if the government is going to totally get rid of student loan debt. And unfortunately, the government cannot do that. As much as people want the government to do that, they can't do that. Student loan debt is the government's largest asset. So the state of the government, our debt to GDP, all of that, they cannot afford to get rid of all student loan debt, and that likely would never even pass Congress, so it's only a matter of time. And that was my daughter. She loves the camera. She's like a bug on a summer night going towards those zapper things, attracted to the camera. Need to get her on here once she's old enough to learn finance and make YouTube videos herself. But nonetheless, that's Khaleesi. That's my daughter. That's who just interrupted the video. Let's get into some of this other information. The last thing that I want to say about this news that did come out today is while it sucks here in the short term, it's not a huge difference. It's not dramatically different. It's only a little bit taken off the top as far as the estimates, but like we just read, they're still seeing 45-50% year-over-year growth, doubling margins. I mean, what more do you want out of a stock like that has a long track record ahead of them of growth into the future? So nonetheless, I'm actually bullish on that. Dropping the price, let me acquire some shares for the cheap. Now, let's get into this other information. Let's first off look at the option flow sentiment. So if we're looking at the options, 5 orders totaling $1.04 million, positive order value of 100%. So institutional investors still very bullish on SoFi stock. 100% positive order value is about as good as it gets on a day where SoFi stock in regular trading was down about 4%. So looking pretty good in that regard. Over the past week, 58 orders totaling $9.04 million. Positive order value of 72%. Still looking pretty damn good in my personal opinion. As far as the short interest of free float, that is 17%. It would not surprise me for shorts to take this opportunity to try to scare you guys out of your positions, to try to drive down the price of SoFi stock even more, and we're already through the floor. So the fact they continue to short the stock is absolutely mind-blowing to me. And they're not covering at all. But you're looking at 17% short interest of free float, 122.53 million shares that are sold short, cost to borrow max of 5.76%, utilization of 100%, and days to cover at 2.82. Now, as well as the bad news for SoFi stock, you did get bad and somewhat good news today with the catalyst that we have been going over here on this channel. And it does say, Fed officials plan to shrink the balance sheet by $95 billion a month, meeting minutes indicate. Now, this was not necessarily a good thing, but it wasn't as bad as how it could have been. I was even thinking there's a possibility that the Fed says, hey, we're going to reduce the balance sheet by $150 or $200 billion per month. It came in at 95, so it's on the higher end range of expectations. The highest expectation was about $100 billion per month from analysts, so it's not good in that sense. It's not a good thing, but it's not as bad as it could have been. Hopefully that makes some sense to you guys. But what I want you guys to know is tomorrow is going to be another big day as well, because if you look at the S&P 500 and you go to the daily candlestick chart, the minutes are actually just a transcript of the last meeting and what they discussed, basically implying what they're going to do at the next meeting. And the FOMC minutes really happened around here, around when the markets were at the bottom, right? Like March 14th, March 13th. And it's very possible, a lot of people are talking about this, that the Fed maybe just didn't want to crush the markets into the ground right away. So they probably spoke a little bit more dovishly than how they feel right now. That's probably why the last 4 Fed speakers we've gotten are talking very, very hawkishly, right? So we were already at lows when they were discussing this. So that's very possible that tomorrow when the 4 Fed speakers speak, and that's going to be Fed Bullard, Fed Williams, Fed Evan, and Fed Bostic, they speak throughout the day. A couple of them are in the morning at 8:30, as well as at 9 o'clock you have Bullard. That they might say something different from the Fed minutes. If that happens, that's where you're going to see the markets kind of freak out some more. If they are pretty much in line with what the minutes said, markets might actually rally off of that. We went up a lot today right after the minutes. Then we did come down, and we pretty much closed at the same price almost that we opened the day. So not a good day overall. You could see the first initial pop, and then we came back down, and then we came back up, tested the level at about 449, came back down to this middle end range. So it's going to be important what these Fed speakers do say tomorrow. So this catalyst is not done. Keep that in mind. And then we do have initial jobless claims as well as continuing jobless claims. And then for Friday, we'll go over it more in depth, but there's not really anything that's going to come out that is going to move the markets in a big way. You do have the WASDE report. Nothing crazy is expected on Friday, though. You're going to see this digestion and continuation from the Fed minutes and the Fed speakers tomorrow, and that's really what is going to dominate the headlines throughout the rest of this week. Now, as far as the probability or how the markets are pricing in a 50 basis point rate hike, that's a 0.5% rate hike. That's sitting at 80.5% for May, as well as 80.5% for June. So we're implying 2 back-to-back 50 basis point rate hikes. And the markets, they don't really care about rate hikes as much. They really care about the balance sheet reduction. So those Fed members tomorrow are going to be very, very important. As far as the max pain for SoFi stock, this might actually change as the price of the stock has went down here in after hours, obviously. But the max pain is sitting at $9.50 per share. Not a, guaranteed science, but, then again, we usually are close to that max pay, and that would be an upside of about a dollar right now, like $1.20. So who knows? We'll see. Probably not likely that we'll get back to $9.50, but to approach $9, definitely not off the table for Thursday, tomorrow, and Friday. If you look at the broad technicals here, we're still well off this low at $7.74 per share. Watch to see if we break under that. If we break under that, that's really a great moment to come in and buy as many shares as SoFi as you possibly can. That's my personal opinion, not financial advice. I know some people go way too heavy in positions. I'm heavy in SoFi, so it would be really like an average down move for me. You guys can see just in this portfolio, I'm down about 42.27%. Average cost of about $14.38 per share. So I'm definitely looking to average down in a pretty substantial way. Got a decent amount of cash here on the sideline to do so. Hit some nice trades here recently. And yeah, it's all going to be good. And I'm very bullish on SoFi for the long term. So nonetheless, that's really what you guys need to watch. I don't think we're going back to 10 really anytime soon, unless the markets totally change their behavior and they start to say, screw it, we're just going to buy stocks anyways. Who knows? That's kind of what we've been seeing. It likely will come back, but we do have a lot of meat on the bone, for lack of a better word, for the markets if we do want to come down. We've seen a lot of gains here in the past couple of weeks. Some stocks have played along, some stocks have not. SoFi definitely not in the playing along camp. So we'll see exactly what does happen with that. The MACD has now converged and is almost on the bearish side. The RSI is at 41.22, indicating we're almost at oversold levels. And this news is really not all too bad, considering everything else that we talked about. SoFi is beating all expectations. I believe even with this slight guide down, they're still beating all analysts' expectations, or at least a majority of analysts' expectations. But it wouldn't surprise me to see analysts come out and downgrade the stock on that, like they already didn't know the student loan moratorium was going to be extended and that it would hurt the guidance of SoFi. You know, we knew this. They're going to come out, probably do that, and try to drop the stock even more after they put on their short positions. It's a lot of manipulation that goes on there, but that's a topic for another video. That's really all you guys need to know. Volume a little bit higher for the day at 53.3 million. And let's take a look at the Bollinger Bands. The Bollinger Bands 20-day simple moving average is at $9.21 per share. You tend to always come back to this middle end range. That's the 20-day simple moving average, and that's typically what you see. So I would expect a bounce here, you know, once the markets realize it's not as bad as they're expecting it to be. So that's going to be all for this video. Hit the like button, subscribe to the channel. If you guys want to get those totally free stocks with Moomoo, check that out. Link down below in the description, as well as Public and Webull. All of that helps to support the channel. Get yourself free stocks for virtually no money. Instructions will be provided to you guys with the links in the description. So thank you guys for watching, and I'll see you in the next one.